This morning, we're taking a look at Hartalega Holdings. CGS CIMB keeping its buy call but cutting its target price from 24 ringgit 80 cent to 19 ringgit 50, still a potential 48% upside from the stock's last close of 13 ringgit 14 cent. According to CGS CIMB, the glove maker said during CGS's annual Malaysia Corporate Day conference that it aims to raise its average selling prices or ASPs by 50% quarter-on-quarter in the third quarter of FY21 and at least 40% the following quarter. Hartalega, which is a laggard when it comes to raising prices, also expects ASPs to increase further in the first quarter of FY22, given the severe shortage in glove supply. In fact, it believes that there will be a global shortage of 120 billion gloves annually for at least the next 2 years. This is because despite aggressive capacity expansion plans, glove makers, both existing and new, are facing some hurdles. For one, it's difficult to secure raw material supply, and the ban on recruitment of foreign workers spells a continued labour crunch. They are also facing higher costs to comply with Act 446 that requires employers to provide quarters that meet the minimum standards of living to their migrant workers. Meanwhile, the pandemic is spelling construction delays. In the meantime, Hartalega has fully resumed production after detecting 37 COVID-19 cases among its workers. Its capacity expansion plans are still on track, with 3 lines to be completed by the end of the fourth quarter of FY21. Despite its robust earnings prospects, however, CGS CIMB says FY22-23 could potentially be a one-off exceptional period for the company. So what's the consensus? According to Bloomberg data, we've got 7 buys, 4 holds and 1 sell. Average target price 17 ringgit 55, which implies a nearly 34% upside to the stock's last close of 13 ringgit and 14 cent.